The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, did the May USDA report give us anything positive for the market trade as we kicked off the week on Monday? Also, what about U.S.-China trade news? How much of an impact did that have on the markets to start the week? And we look at the livestock side, a very strong day in cattle. Is that tied to the closure of the southern border with New World screwworm issues? Once again, let's talk about all that and more. Joining us for a conversation, John Heimberg with Total Farm Marketing is here for our market analysis. John, welcome into the show. Hope you had a great weekend. Let's start with that WASDE report and, looking at the market reaction when it was all said and done. Soybeans had a strong day. Quarter wheat, not so much. And I kind of think that the soybeans were tied more to the U.S.-China news versus the WASDE numbers. What do you think, John?
I do think that's a combination of factors there. We saw the strong overnight session based off the China news, walked that back a little bit before the report. And then we get the report out, which, in a nutshell, according to base numbers, was friendly for both corn and soybeans. Look at that soybean numbers. He's got old crop. We saw 25 million bushel move in export demand there to bring that carry out, down in that regard. Then you also see on the new crop side too, 295 million bushels. Market was thinking closer to 360. I mean, you're talking a 70 million bushel, in the area of that miss to the downside. So it really, when you start just looking at that base number, boy, for new crop beans, weather could become a very big issue. Or do we see some more acre shift? Or you just take a bushel or a half or bushel or two off that yield for next year, which USDA started at 52 and a half. We can throw a 51 and a half and watch that carryover come down another 80 million bushels. So from in a nutshell wise, really kind of puts a lot of pressure on this bean market and the producers to kind of nail a crop per se. Mm-hmm. Now, on the flip side, big export numbers or big demand numbers in both corn and soybean reports. And that may be a little bit of the wet blanket over here, because obviously if we do start seeing some adjustments on yield or production or things of that nature, there's plenty of maybe extra room to chop off some demand to kind of still keep this thing balanced where it is. But, we still got a nice reaction out of that soybean market today. We'll see if we can get some more trade possibly coming back here from China. Obviously, the Brazil beans and the extra beans out of Argentina that we got this year are going to be a big factor. And then the USDA comes out and says next year's Brazil bean crop is going to be another record at 175 million metric tons on more planted area. Those types of things are big factors here. That could weigh in this market long term. But at least today we got a nice little pop, and nice to see the bean market kind of close near the top of that range.
Well, as we look through the ending stocks numbers on our video feed, the graphics from Karen Braun of Reuters from her X account, and she shared another graphic that I think we should discuss a little bit here, John, and that's looking at global corn stocks. And I mean, you look at this report, all in all, I'd say it was friendly for corn, yet here we are finishing, up 3 in new crop, down a penny in old crop. I mean, this corn market just didn't really move a whole lot. What stands out to you when you look at a chart like this and look at the global corn picture right now?
Again, just like I kind of said, the initial picture is friendly. Okay. You look at global stocks to use, that's including China, 18.9%. That's the lowest number since 2013, in 13 years. Now you take China out of that picture, that stocks to use drops down to 7.9%, which again is another set of multi-year lows, because the Chinese corn's not available to the world on exports. So really that exportable supply is pretty tight. So again, it doesn't give us a lot of weather wiggle room. In other words, if this U.S. crop, we got a big crop projected, 181 on yield, 95.7 million acres. That number probably, I think in the market's mind, is going to go higher in June. Again, we'll see how that comes into play. And, the USDA really kind of beefed up the demand side of the equation on the corn side too, and get that carryover at that 1.8 million bushel or billion bushel level, which was 200 million under expectations. When you say those things, it sounds very friendly. But then again, we've got wiggle room. It's the first number. It's a starting point. A lot of things are going to change. I thought one number that jumped off at me with cattle numbers as tight as they are, that they raised feed usage up 150 million bushels from this year to next year. It's either signifying we're going to get a lot more poultry and pork to start eating this grain, because those cattle numbers, especially with the news today in the cattle market, aren't going up anytime soon here. So those are, we'll talk about that in a bit. But, so there's some things in this place. But all of a sudden, you start seeing that corn yield come down to a 177 on those acres. That starts taking that carryover close to that 1.5 window, and right now, 450 corn, 445. We have 449 and 3/4 on the high today before we turned around. That's undervalued. Now, one little wrinkle on the global supply of corn, I think that's a big factor on that old crop corn price. And we've seen talk about this over the last couple of days, and the USDA confirmed it with their numbers today, which is the Brazil corn crop is going to be a monster. They raised the Brazil crop for this summer, the Safrinha second crop corn up 4 million metric tons to 131. So right now, I think and then you got wheat numbers that are heavy overall. So that combination of heavy wheat numbers, great planting progress, front end demand still good, even though for U.S. corn, but maybe slowing here with those extra Brazil bushels just makes the market very comfortable in terms of keeping selling pressure on that July contract.
Yeah, USDA forecasting winter wheat production up 2% in 2025. We got the Kansas wheat tour going on this week and more. And really, I'd say the wheat market's under pressure maybe from that, plus the dollar moving higher too with that U.S.-China news that we got here over the weekend and into Monday. And I mean, talk about that for us here and the impact on the markets. Again, a bit of a pause, rolling back tariffs here, 90 days seems favorable. I mean, what's your take on that and the impact on the grain markets right now, John?
At least to the algo traders and the computers that maybe are trading off that news on the overnight or what's over in the equity markets, as all of a sudden it looks like here comes the S&P ready to run to a new high based off of that news. So we'll have to see how that continues to play off over the next few weeks here. But again, obviously that's friendly. You're looking at the world's largest consumer of commodities. Now, doesn't impact the corn market because they haven't bought any corn. Okay, I mean, it was minimal this year. They raised their production forecast. China raised their production forecast up, and they left corn imports at 7 million metric tons for next year. They're not going to get that from the United States. They're going to get that mostly from Brazil. And obviously with the large supply coming, there'll be plenty of bushels available for them more than likely. So again, that's one of the things that didn't really affect the corn side of the equation. Obviously, it did affect the soybean side of the equation, just basically keeping that market open to us. We're going to count on those Chinese purchases more in the new crop side versus old. We know the window's kind of closed here now with the Brazil bushels coming in and being on the marketplace. Most of our, today we did get a soybean sale on the export front this morning. That was more than likely. Maybe it was a Chinese purchase in good faith. Sino Grain can purchase beans without tariffs getting put to them. But like we saw, Pakistan stepped in for the first time in multiple years buying U.S. beans. Other countries have shifted some of their demand to us here. So maybe that's somewhere where that purchase came from, here today. So at least with soybeans, we finished near the top of the range. New crop beans probably more affected by that over than the old crop supplies. Like I said, November beans 1057. Kind of looks like we got an inverted head and shoulders on that November bean chart, and we're kind of at the neckline here. The next couple of days could be pretty key. We get some good push through here. You could just see some good technical buying in the soybean market, and I think that's going to be a window for producers to look at that opportunity to get some beans moving if they haven't done anything, or at least get some puts bought. Because again, there's a lot of demand in that soybean balance sheet for next year, and that 295, unless we see some major production drops, you start seeing export demand come out of there. They did raise crush by 70 million bushels for next year, so that's a big component of it. Those things could come into play, and also that carryover is back up above 350, and that's going to be heavy on the bean price. So again, watch this potential rally here, especially again, not a lot of wiggle room for weather here. If we get some lift because of weather, it's going to turn into opportunities to sell.
About that cattle trade, a really strong start to the week there. We saw the closure of the southern border on Sunday to New World screwworm, or because of New World screwworm issues. Have to think that was at least maybe the powder keg that lit things again to start off the week, John.
Yeah, definitely, and throw in again the trade deal situation and
Yeah.
1,000 point jump in the stock market. Cattle market's been tied to it, and realistically, though, for cattle, on last week's export sales report, China canceled 5,000 metric tons of beef. From that report, they canceled a few thousand tons a couple weeks earlier than that. So now maybe that business comes back now that the market's open again to basically U.S. imports of U.S. beef into China. So we'll have to. I think that was a part of the big puzzle here this morning. But then you throw in again that Mexican screwworm issue, locking those imports down from Mexico. Got a $6 move in feeder cattle today, well above the $300 mark. So it kind of feels like maybe another legs here. Now, I'm a little cautious here. Usually we get these rallies $15 to $20 and we're kind of peaking out. But boy, you can't deny the strength that we saw in the cattle market today. We even kind of gapped open the June futures, August futures, rolled back, filled that gap, and back up we went again. So that just tells me there's some money wanting to buy this market here. So throw in today another nice day in the retail side as well, as choice carcasses close up at midday above 347 again. So it gives us still some fodder in this marketplace, at least for strong cash trade again this week. Now, some of my top targets, 217 to 220 windows where I was kind of targeting that June. Doesn't mean we can't go higher, but it's a point. I think we're a little bit lofty. If I was a producer and I'm sitting on cattle here for June or August, definitely look at some cheap puts underneath this market, because we could have a day where we're up $1.50 to start and down 2.5 by the end of the day, just because the technical side says let's take a little money off the table here.
How about the hog trade? Not really seeing much of a spillover from cattle there, a little bit, but it just feels like it's a different set of dynamics in hogs right now, John.
Yeah, and again, we're just consolidating. We had a nice pop on the open today, ran it back, that June contract back up to the $100 mark or just short of it. And then we just saw the sellers kind of kick in and we drifted back down to the range we've been working in here. Again, the Chinese news is probably the biggest thing supporting that hog market today, at least on the open, just because they're a major purchaser of U.S. pork and we need to keep them in the marketplace. So that was friendly in that regard. But it just sure feels like this thing gets a little expensive when we start getting to the upper $99 window on that June contract, at least here in the short term. I do think there's still some upside there, but I'm a little fearful we're going to go back and test 96 first before we go up and maybe push this thing back out again in that regard, just because we just really can't get any solid news, cash market, retail side that just wants to drive this market higher.
John, good thoughts. Anything final you'd mention or reiterate as we look across the trade, starting off the week again with some decent support in soy and in cattle? Any final thoughts you'd leave folks with here today?
Again, don't fall asleep on the defensive side. And everybody wants to be optimistic, and we got some bullish type numbers today for grains. And obviously, this cattle market is so overvalued at times. Maybe it's not overvalued, but we've had a nice run here that maybe we're getting a little rich, in that regard. I'm looking at the puts all the way out in the 26 right now on cattle, just to make sure we're starting to build some floor on this, and just get things protected. They may not be the strongest puts because of the cost, but at least it's a floor. We can always address them down the road. So stay active on that side. Same with soybeans and corn. If we get some follow through buying, on this market, the global supply of beans is still heavy. And again, may still stay heavy, especially if we produce a pretty good crop this year. But there's going to be opportunities, I think, with those numbers we got today. So make sure you're setting some targets. Let them hit. That's for corn and soybeans, both on the upside for new crop sales or buying puts to protect yourself. Just set some targets that work for you. Let them go, and if they hit, great. If you want to re-own them, find a way to do that. But make sure we're building some base over here over the next few weeks. Typically, we see markets get fairly firm now until about the Father's Day window, and then we'll get a better look at things in terms of the weather.
John, if folks want to reach out and have a conversation with you there at Total Farm Marketing, how can they get in touch?
Love chatting with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website, totalfarmmarketing.com.
John Heimberg, Total Farm Marketing. Always good to hear from you. Have a great week, and we will talk to you next week.
Sounds good. Have a good week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.